A whopping great big rally again on Wall Street. Now we're up 164 points, 26,376. New record highs for the Dow, the S&P, and the NASDAQ. Look who's with us at 11 o'clock in the morning Eastern Time instead of 9 o'clock. He's a little lie-in today, the man has. Jeff Sica is with us. All right, Jeff, is there any... look, this has been an extraordinary winning streak. On a monthly basis, it's the longest-running winning streak since 1959.
Right.
Now, look, all good things come to an end sooner or later, but when's it going to come to an end?
Well, here's the thing. I've been saying every week about complacency. The market's been going up 1,000 points, 500 points. I mean, the fact is, complacency, to say this market is complacent is the understatement of the year. This market is complacent.
Is that dangerous? Is it dangerous?
It is dangerous, but I want to say this. Momentum is a powerful thing. Psychology is a powerful thing. It drives markets. The psychology is very much intact, but the psychology could change when things start happening like interest rate increases. Nobody talks about that. We do have a very, very good economy, but you have the people at the Fed who are probably going to be thinking of the potential that it may overheat at some point,
okay,
and they need to pull back.
I got it. But look, we're at 26,000, what is it, 26,378 at the moment. Tell our viewers, should they start to sell into this big rally? Take some money off the table? Should they do that?
Yeah, and I think
yes?
they should. They have to begin to gauge the fact that they've made money, that maybe they incurred some debt in the process. I'm a little worried about the debt people have taken on. Maybe they should pay some of that debt down, take some profits, not be greedy all the time, still keep their stocks, some of the stocks that they own, but not fall into the emotion of believing what most people believe, that this is not going to ever end. And that's not.
You know what's interesting, very quickly, the dollar is getting absolutely killed today.
Right.
It's now down to 142 against the British pound. It costs you $1.42 to buy 1 British pound. It was at 120-something a couple of weeks ago, so the dollar is very weak.
But, but it helps the stock market.
Exactly.
Because
oil, products are cheaper to buy.
Our exports get cheaper.
Yep.
And for foreigners, our stocks get cheaper.
It puts oil up and gold up, too.
Exactly. Look, you've got to tell me about GE. Who would have thought that, you know, just a few years ago, we were talking about the demise of General Electric? It's down to 1659 as we speak.
Well, keep in mind, the person with blood on their hands is the prior CEO, Jeff Immelt, who made decisions on behalf of GE. They fought battles on multiple fronts, got in businesses at the top, out of businesses at the bottom. He made strategic mistakes that is costing GE billions and billions of dollars.
Would you buy it at 16?
No, because this SEC investigation is looking into how they book revenue. And if it comes out that they're not booking revenue correctly, you can't trust their numbers. I'm not saying that's happening, but if it's proven true, you're going to see another leg down on GE. I wouldn't touch it.
Quickly, we've got a whole bunch more companies issuing bonuses and higher wages and better working conditions. Disney, JP Morgan, Verizon, Starbucks. Surely you welcome this.
I love the names on this list, like Starbucks. The big enemies or the people who oppose Trump are giving these bonuses, proving that's been said on this show, and you've said time and time again. 2 million Americans benefiting from a tax cut is a thing to be celebrated. We have not seen this in decades. This is a great thing.
Do you own any Walt Disney, Verizon, JP Morgan, Starbucks? Do you own any of them?
No, I don't own any of them.
Oh, your hands are clean. All right, Jeff, thank you very much indeed for joining us, sir. I appreciate it.